Hey, good morning. This is Mayor Valensky with Driving Markets. The usual warning, anything said on this piece is only an opinion. It's not investment advice. It's not financial advice. I'm not a financial advisor. I'm not an investment advisor. And it's only purely an opinion broadcast on media for what's going on in financial markets. Let's get going. So yesterday, I've been saying the markets are too high. And yesterday with the producer price index, which is the producer inflation gauge in the US, coming in surprisingly lower than expected. They were expecting a 0.2% increase, actually came in at minus 0.5. That sent all the markets up again on the back of Wednesday's retail price index. That shot up, and yesterday they shot up again. But during the day, I did issued a couple of broadcasts that looks like the market is a sell at these levels. It just can't hold on to the gains, and that's exactly what happened. The Dow was up over 250 points at one stage and came all the way down to close up only 27 points. The Nasdaq, which was in significant positive territory, actually closed negative on the day, and that's mainly due to the rise in the yield on the 10-year US Treasury. Again, the US Treasury is back on track for the yield to continue rising, which means investors are buying into bonds through nervousness. They don't believe the inflation figures. The bond market just simply does not believe what's going on with inflation. The bond market is the underlying core of financial markets, and they're more true to economic numbers than any other part of the economy. So when the bond traders and the bond markets are buying bonds, that is a concerning sign. It means that there's something not quite right in what's being reported by the labor market and by the Central Bureau of Statistics. Not that it's a conspiracy, but maybe the measure of inflation that they're using is so narrow that it makes the numbers look good when reporting them. I personally don't believe those numbers. I personally believe that inflation is running at 20%. I've said this all along from the beginning of the year, but the central bankers who get paid $3-4 million a year, they're saying or fooling us, inflation is running at 8.5%. Don't be fooled. It's not running at 8.5%. It's not running at 9%. It's running at 20%. And the bond market knows that. The bond traders, who are true traders, know that. They're share manipulating traders. They're purely based on bottom line loans and bonds and corporate finance. So they know more about or more fair about the market than anyone else. When yields go up, then what you've got a bond market that is very, very concerned with what's going on within the financial markets. Yields going up, that costs the high-tech companies more money to borrow, to finance. As a result of that, the Nasdaq, which is all high-tech, dropped on the back of rising yields. There is concern regarding purchasing amongst the consumers because 38% of adults are holding off major purchases at the moment due to inflation and due to a much tightening household budget, that they just don't have the cash flow or the ability or the ease with which to go and buy those goods. And there is a concern, there's a worry out there, and consumers are feeling the actual biting in their pocket and the crunch of their monthly cash flow. So it is having an impact, and therefore, even though we do have the numbers came out with slightly lower inflation in the States, those numbers may be a bit lower again in August. However, in September, you can expect inflation start rising again. And with the price of oil now creeping up, I've been saying oil will go above $100. It's on the uptrend. The uptrend's not been broken, and oil will go up above $100 a barrel and probably go to $120 a barrel by October, November as the winter bites in. Furthermore, you've also got the natural gas prices, which are all-time high, and they are also going to have a big impact on people's spending power, especially when the prices rise in September in the UK and around the world. That's going to eat more into the cash flow of the consumer, and it's going to be fed into inflation. It's going to have bigger inflation figures coming through in September, October, November. As regards Bitcoin yesterday went to 24,700, and Ethereum was also up, but at that point I did say it's probably worthwhile selling it, and Bitcoin's come down to 23,900. Anywhere around the 24,000 level, in my opinion, is a sell if you're a crypto trader. Ethereum or Ethereum ETH is far too high, and all of them look like they're going to float down over the August period. To contradict what I've just said, you're going to have some volatility. You're not going to have a lot of people on vacation, holiday, and therefore you may even see a further rise in stock markets. But I'm talking about the longer period, not on the day-to-day transaction period. I'm talking about over the next month, 2 months, you will see a downtrend continue in financial markets and in the crypto markets, heading down. However, the US dollar I expect to rise up because there's going to be a flow into a safe haven, and interest rates in the States are going to continue rising. They haven't come to an end, also in the UK and in Europe. So inflation is here, and unfortunately we mustn't fool ourselves. We've got to prepare for ourselves and get this back on track. The central bankers are not doing enough, and I expect a 75 basis point rise. There's an outside chance of that in August. That's more or less for now. Wishing you have a good weekend. Shabbat Shalom. All the best on driving markets.